What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Microsoft, ticker symbol MSFT, on a variety of time frames in anticipation of tomorrow's trading day, Monday, February 5th. Well, Microsoft stock on Friday, very near to another all-time high, but not quite here. Let's start with, of course, we're going to look at this on a variety of time frames, get as much context as possible to lay out, tomorrow's expectation here from a variety of perspectives, okay? And let's look here at the 1 minute chart to start. I did actually send out an intraday scalp alert on Microsoft on Friday. Just quite a clean setup here. By the way, if you guys want to get those scalp setup alerts, take a look at that link in the pinned comment. There also are currently a few platinum one-on-one spots available. You can get grandfathered in at the current rate. Hope to see you join. But just a gorgeous setup here on Microsoft on Friday. But let's take a look at the 5 minute chart, because what I want to do here is I want to actually look at volume. We can learn a lot by digging a little bit deeper in the volume. Now here, this is highly likely to be a data error. I saw this on a variety of tickers from Friday. It was on SPY. I believe it was on perhaps NVIDIA. It was on a variety of big blue chip names and ETFs. So we can try to ignore that. I know it kind of gets in the way. But looking at the rest of the volume here, and then we compare it to the actual moves on the name, of course, off the open, we got a lot of volume. That's not uncommon at all. But what we're always looking for, whether we're positioned long or short, by the way, is we want higher volume while the stock or ETF is moving in the direction of our bias. Okay, and then you want volume fading off as the stock moves against you. Okay, you can see here the biggest upside move we had was right here. Now that's midday, so we have to take into the context of midday volume naturally being lower. Okay, you can see here perhaps a little bit of a bump in volume as we saw that morning volume fade off. What we would expect to be lower volume intraday, kind of around as we headed into lunchtime, at least in New York. And then you see volume pick up a little bit. But as far as very obvious volume spikes and drops, not a ton to get off the 5 minute chart here on Microsoft from Friday. So let's move on to where we get the majority of our context, the 30 minute, and then we'll look at the 4 hour and the daily, looking at these self-fulfilling prophecy areas that everyone's watching, so we're going to need to be watching as well. So really crucial here that I'm paying attention to, look back on Thursday. You can see Microsoft traded within that channel between the 50 period, the white line, and the gray line, which is the 200 period, the two most common technical indicators really on any chart. We treated that as a channel. After hours, we broke out. Okay, we came back down and tested the 50 period hard early on Friday, and then we grinded higher the majority or the rest of the day, allowing that 50 period to cross over the 200. Now, looking at that crossover, we saw that on a lot of stocks and ETFs on Friday. Understand that in a lot of chat rooms over this weekend, you probably have seen or are going to see a lot of people saying, "Oh, golden cross on Microsoft on Friday on the 30 minute chart," right? I mean, listen, for me, it's overhyped. Okay, and I've said that on a variety of tickers this weekend. I think it's overhyped. The reason that I look at the crossover at all is because the 50 period is a quicker response rate indicator. I mean, it's a shorter term indicator, right? It's certainly shorter than the 200 period. So it reacts to movement faster. Now, whether it's an upside move or a downside move, what that does is come up quicker and put kind of feet underneath an upside move, or more of a ceiling above a downside move, to help out whoever's bias the most recent move was in favor of. Because looking here at the 30 minute chart in particular, what is that 50 period moving average doing? Well, it's adding an additional psychological barrier if the stock were to come down and test that against like bears, okay? Because this would become an area, and we want that as close as possible if we're bulls, to perhaps encourage some buying, right? Or some loss cutting from shorts if we were to come down and test this, or especially break down through this just a little bit and then hover. Okay, it's another psychological barrier. The market is all, in the short term, it's all just psychology, even around news catalysts, right? So looking at the 30 minute chart as we head into Monday, if I'm a bull, I'm looking at this 50 and just saying, if we see a downside test, just hold the 50. If I'm a bear, I'm looking at that and saying, okay, if we see a downside test, I want to see a break and a head down toward 200. And listen, if we see a 200, the bears are going to get greedy. They're going to be looking for a downside break of that too on the 30 minute chart. Now, let's take a look at the 4 hour. Of course, the 200 period on the 4 hour, it's lagging because we're zooming out now to a longer time frame chart. The 50 period, though, is the most immediately relevant level, technically speaking, on the 4 hour. Okay, of course, we have that high, but we'll look at that more so on the daily. That 50 period is currently around 404. That's about 1.7% away, so that is within range of a single day on Microsoft. If we do see a test of that, obviously, if you're a bull, you'd love to see a repeat of Friday, just a hard bounce. But if you're a bear, you know, you wouldn't mind seeing a repeat of last Wednesday breakdown through. Okay, that's what you would be looking for. Now, let's look at arguably the most important chart of all, which is going to be the daily. Okay, and let's zoom in a little bit here. That all-time high is currently 415.32. So obviously, what is everybody watching? Both bears and bulls? That all-time high. Now listen, if you're a bull, you want to see a rip upside through all-time highs, but you don't want to see a rejection off the all-time high. You want to see a rip up through. Ideally, I know it goes against the sentiment, but ideally a rip through, a back test, and a claim of support of that all-time high area, and then a bounce up out of that hole. If you're a bear, you're looking at this all-time high and you're just saying, just fade as hard as possible away, back down, let's make a move back down below 400, you know, not necessarily all in one day, but back down toward 4, back down toward that 50-day moving average. All right, implied volatility, in comparison to the last couple of months, you can see here it's kind of in the mid-range. As that goes lower, that does open up some good opportunity for new options buyers to potentially get in and then see some appreciation in their contracts, especially if they're right directionally, right? From IV pump, if we end up seeing an IV implied volatility return back toward the middle of that range, equilibrium. If it's higher, of course, that's ideal for options sellers. Here in the mid-range, though, you just have to look at that and compare that to your risk tolerance and decide where you stand, because that's a big factor in the pricing of options. Now, what we need to do here is take a look at the options chain and see how the traders are feeling. Oh man, about Monday, 637,000 total contracts traded. That's a good sample size. It's a big sample size. Okay, that's really good, plenty of data. 425,000 of those were calls. 212,000 approximately of those were puts. So we are seeing overall call put ratio leaning heavily to the bullish side, which is really interesting. Now, the short-term speculation, the 0 to 20 delta range, is a little bit more undecided looking at the short term. 134,000 calls, 122 approximately thousand puts. A little less weighted to the bullish side when we're looking at the very short term. Okay, so how do we get an overall call put ratio that is so incredibly biased to the bullish side if the short term is just slightly weighted to the bullish side? Well, you can see here the 61 to 80 delta range and the 81 to 100 delta range, which represents typically the further in the money and longer dated, more expensive, higher quality contracts, is leaning heavily bullish. I mean, we're seeing over 70,000 calls within the 61 to 100 range, whereas we're seeing more like 6,000 or 7,000 puts in that same range, or more like 7,000 or 8,000. Okay, so we're seeing like almost 10 times, or about 10 times the amount of calls in that, you know, deeper in the money, mid to longer term range than we are puts, which makes sense, of course, that people are betting mid and longer term to the bullish side heavily on Microsoft compared to the bearish side. Short term, a little bit more undecided, still leaning a little bit bullish though, and the overall ratio leaning heavily to the bullish side. Okay, but again, this is just data, and the masses, as always, can be wrong. Make sure your risk is managed. Guys, before you head out, let me know what stocks you'd like to see me cover here on the channel in the near future. Even if it is just more Microsoft, that feedback helps out tremendously. And I'll see you in the next one.